And as far as IEX is concerned, this stock has also corrected from its recent highs. It's a good stock and catering to the power sector. Right now, it's in a monopoly kind of situation as far as power trading on the exchanges go. But down the line, there would be competition from the exchange, which has been opened by PTC. But still, I feel at the current level, this stock can be added or can be held on to. And I think over the medium term, we could see an upside of 25 to 30% from the current levels.
Okay. That's the view coming in on IEX. Let's move on and let's take a query from Appala Raju. And he's a long-term investor. He's writing to us from Bangalore. And he's saying that he's holding APL Apollo shares, about 50 shares at 845 rupees per share. He wants to know whether he should sell or hold, Kunal. And also, if possible, could you share with him a short as well as a long-term target for APL Apollo tubes?
See, I think, frankly, I would suggest to hold on to the stock price. I believe from a medium-term play, you could look out for 1,080 or 1,100 as a target range potentially for APL Apollo. But I think it's a stock which should be bought on dips. Now that it's good that you've bought at lower levels of 850 odd for APL Apollo, which also coincides, if I'm not wrong, with the major support point for the stock price. So it's a good buy and a hold candidate. If you're looking at it from a medium-term play, say for the next 6 months odd, then I think 1,080, 1,100 could be a potential target range which you can eye on the stock.
All right. Question coming in from Uday Prabhu, and he's asking about Reddington, India, Vikas, and he's bought this share at levels of 130. He's asking if it's a good stock to keep adding going forward, and he's also asking if you have a contra view on Zomato as he does. He's looking, or rather he's bought at levels of 53 to 50 to 53, and he's wondering whether it makes sense to add significant quantities at this point.
As far as Reddington is concerned, it's a good quality stock. The stock is corrected from its highs and trades at reasonable valuations, so I'll maintain a hold on the stock. And as far as Zomato is concerned, today we are seeing some pressure because of the block deal which has happened. But I think at the current levels, this stock also should see some upside from the current levels. And I think it's been beaten down badly, and say at the current levels of close to around 50 rupees. I think it's a good stock to be with, and I'm seeing levels of 75 to 80 rupees soon in this. It could take another 6 to 9 months, but we could see levels of 75 to 80 rupees on the stock.
This one is coming from Ramchandran V, and he wants to know about EID Parry. He wants to know whether he can hold on to it for the next 2 to 3 years, and is it the right time to start buying this particular counter? What's your take, Vikas? Do you think it's a sweet bet to take?
Yeah, again, it's one of my favorite stocks. I've been recommending this stock since quite some time from pretty low levels. The stock has done really well. It's a sugar manufacturer, plus from a valuation point of view, since this company owns around 54% in Coromandel International, which gives a pretty decent value to this stock. I think at the current levels also one can buy into this stock if one has a 2 to 3 years horizon, or one could use a staggered approach, and on every decline this stock can be added.
Okay, the next question is coming in from Chandrasekharan, and he's writing in from Chennai. He's asking about Quest Corp. He's bought at levels of 750 rupees per share, and he's losing ground. He's wondering whether to add at this juncture, Kunal, for the next 6 months. Is there a possibility of recovery?
Well, you can look to add at current levels. I think it's a good risk reward as well to buy at current zone. I think if I'm not wrong, the stock is back at its on a YTD lows for itself. I think 550, 570 was the previous low for the stock, and it's almost hovering closer to that kind of a support point for itself. Long-term charts are quite okay, stable for Quest Corp. So purely from a risk reward play, I think it makes a lot of sense to buy or nibble into the stock at current levels.
Okay, this one is from Ravi Chandran, and he's writing to us from the UAE. He has Zensar Tech, about 120 shares, which he's purchased at the price of 303 rupees per share. He's willing to wait for the next 9 to 12 months for a target of 360 rupees per share. What's your take, Kunal? Do you think it's achievable within 9 to 12 months or much before that, or what should Ravi Chandran do?
So I think it's I would say it's a possible target for Zensar Tech. Now, even though the stock may take some bit of more time, I would believe potentially over the next 6 to 9 months. Now, assuming if the indicators start to shape up on a breakout mode pretty quickly, then you might see the stock heading towards that level quite sooner. But as of now, the indicators are poised in a very neutral kind of a zone for itself. And that's why if you've seen over the last maybe couple of weeks, where the IT stocks have rallied, the mid-cap IT stocks have also rallied, Zensar Tech has not rallied that much because the indicators have come back into a neutral territory. So there is a lack of momentum, but the prices are getting into a stable zone for itself. So the only point over here, which I would probably be looking out for is how much time the stock would consolidate. But eventually, I think the stock should get into a mean reversion mode with respect to the other mid-cap IT names. I would suggest a hold.
All right. The next counter that we're talking about is DLF, and Sahana from Tamil Nadu has written in on Twitter asking about this. Sahana is bought at levels of 220 per share, asking whether they can hold for the next 3 to 4 years. Because DLF hasn't done very much this year, or in fact over the last 1 year. But does it make sense to hold this counter for the next 3 to 4 years?
Yeah, Alex, first I would like to compliment the investor for having bought DLF at good levels, and she's already making 50% on the stock. And I think one can hold on to the stock at the current levels because I'm bullish on the real estate sector as a whole. The performance which has been coming from the companies which have already declared their results have been good, particularly from companies which are operating in the south. But DLF also has cleaned its balance sheet quite a good way over the last few years, and I think from here on we could see some upside on the stock, and I think at closer to 370 levels it's a hold. I have a target of 450 rupees on DLF in the next 9 to 12 months.
All right, this one's from Mukil, and he's also writing to us from Bangalore, and he has Delta Corp Kunal, 206 is the buy price, about 1,000 shares. He wants to know whether he can hold on to Delta Corp, also wants to know what sort of short-term target should he look at.
See, I think Delta Corp looks to be on a breakout mode for itself, but then the stock has this tendency, at least in the last 4-5 days, of getting to a breakout and then a sudden pause for itself. So maybe that may not help the near-term prospects for the stock price. So in such kind of a trade, you have to be cognizant of buying the stock when it gets into a breakout and then reverses or retraces back from that breakout point, rather than actually buying into a breakout zone, because many a times when the stock has this kind of a tendency, the breakout, they tend to get failed and you see the stock getting into a time consolidation mode. So much better play to run buy Delta Corp would be if the stock corrects, averages back towards say maybe a 190, 192 mark. So if you already bought at higher levels, then I would suggest to average closer to that mark of 190 for Delta Corp and then look out for targets of 200, 205.
Okay. So we've got a question on, one sec, I've just lost it. Leon is writing in from Thrissur, and he's asking about Indra Medical Corporation. Do you have a view on this, Vikas? He's bought at levels of 79. He's looking for a long-term view.
Now again, Indra Plus Medico is a good company, fundamentally a solid company, but the stock has corrected and the investor is sitting on losses. But I think at the current levels, one can certainly hold on to it. I think he would see his prices soon. So I would maintain a hold at the current levels.
Okay, this one is coming from Abhijit Rao, and he's saying that he has 2,000 shares of Hathway Cable. He's purchased it at the price of around 23 rupees per share. He wants to know whether it's a good hold for the long term or should he exit. What's your take on this one, Vikas?
I think one should exit this counter. The stock has not performed and there are umpteen number of opportunities elsewhere in the market. So why to be with such a laggard stock? So I think he should book his losses and switch to some other good quality stock.
Interesting question. This one's also for you, Vikas. We've got Devdas from Bhilai who's asking about Tata Steel, which he's bought at levels of 1,100. The question really I think a lot of people are asking is the commodity bull run still intact? What we've seen in metal counters over the last few months perhaps put a bit of a spoke in the wheel. But would you hold for the long term or maybe 2 to 3 years?
Yeah, Alex, I'm of the view that the commodity cycle is still intact. This is a correction in a structural bull run which we are witnessing. I think once China normalizes, once Russia-Ukraine gets resolved, and this China-Taiwan does not escalate, I think metals would do well. And Tata Steel is one of the favorite bets. The government has imposed export duty on steel, and that has also played a spoil sport as far as steel stocks have been there. But I think at the current levels, the investors bought it at close to the current market price. Obviously, post the split, there's a lot of interest in the stock, and I think at the current levels, one should certainly hold Tata Steel. I think in the next 2 to 3 years, we could easily see levels of 150 to 170 rupees on the stock.
Right. This one is on Asian Paints. Neha is writing to us saying that she's holding Asian Paints at the levels of 2,921 rupees per share. She wants to know whether she should book partial profits now and re-enter later. She likes the company as a long-term holding, but concerned about increased competition and market volatility. Vikas, is this worth a concern? Should you be concerned of the competition and increased volatility for a stock like Asian Paints? What should Neha do? Book partial profits and look to re-enter later, or continue to hold on?
No, with my experience, I can say this, that it's not possible to book profits and re-enter. This normally does not happen since she is a long-term investor, and I think she's put her money into a very good quality stock, which is a portfolio stock, and I think this stock would continue to deliver for years to come. It's a consistent performer, and I think with the crude prices coming down and this being an industry leader and the sectors which this caters to, like automobile and housing, they're doing well. I think the stock will do well. So I think she should not worry about the increase which has taken place in the stock recently, and continue to hold on to the stock and not think about selling it right now and buying at lower levels, which would not be possible in my opinion.
That's a fair point. We've got Sheena Joffe from Palakkad who's asking about Metropolis. She's holding at levels of 1700, which is slightly elevated. She's asking whether to hold or to exit. Kunal, what's the view?
I would suggest to hold on to the stock. Now, I think the worst part of the correction seems to be behind the stock price. Now, typically, from 3,400, the stock has corrected to 1,400. So it's corrected by more than 50% in the last, I think, one and a half odd year for itself. So that's the major part of the, the rally which had happened from 2020 lows. Major part of the correction seems to be, behind us for Metropolis. And now, even if the stock gets into a time-wise correction, so what typically happens is when a stock corrects by 50%, 60% plus in a short span of time, these stocks, they get into a time-wise correction, and it tests the patience of a lot of long-term investors. So I think we could now getting into or entering into a zone where a lot of the patience would get tested for a stock like Metropolis from a long-term play. So if you can hold on to the stock and have a longer-term time horizon, then I think you should definitely look to hold or maybe an average at current levels.
Okay, this one is from Anand. Anand wants to know what's the view on Varun Beverages. Is it attractive at current market price? Also, what's the ideal price to enter this counter? What's your take, Kunal?
Well, I would suggest an avoid, frankly. Now, I understand that the stock has run up exceedingly high, but the monthly and the quarterly charts and the way RSIs are poised up. So I'll give an example. On the quarterly charts, the RSI for Varun Beverage at current levels is almost at 92. On the monthly charts, the RSI is almost at 86. Now, these are very, very high zones for RSIs, for any kind of a stock. So, whatever reason, the stock may be rallying, I think it doesn't make sense to initiate a fresh buy. For someone who's been holding on long positions, the best strategy is to have a 3-day or a 5-day trailing stop loss and keep on riding the trend. But for a fresh buy, the risk reward is not at all in favorable.
All right. We have to slip into a very quick break, gentlemen, so do stay with us. And viewers, we'll be back before you know it. So keep your questions ready.
आग को फैलने से रोकना मुश्किल है पर
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Realistic.
Welcome back. You're watching Buy Now Sell Now. We're in the midst of the query segment, and well, a lot of you have written in, so I'm going to continue taking your questions. Denny's writing in from the UK, and he's asking about Voltas. He's asking about the August call. He's got a strike of 980, and this is at 51. What should the strategy be? He's got 5 lots.
So I think at 980, if you bought at 51 rupees, I would probably expect that you've bought it maybe yesterday or day before, because that was the option price at that point of time. Right now, the option strike is at, I think, 35 or 36. The option price is at 35, 36 levels. And even the charts are not very attractive for Voltas. So, you know, the best time to try and buy the stock when you're looking at an option trade on the buy side is when the stock has confirmed a breakout or is coming out of a breakout range after maybe a couple of weeks or at least a couple of months of sideways consolidation. That did not happen for Voltas. The stock was trying to, you know, dabble into this range of 900 on the downside and I think 1050 on the upside. So the timing may not have been perfect. I would suggest an exit on the stock at current levels and then wait out for the stock to break past about 1050. That could be a good point of time where you can look to buy the options yet again.
Okay, this one is coming from Omkar, and he's saying that he's bought New India Assurance at an average price of 166 rupees per share. He wants to know whether he can average at these levels. What's your take, Kunal?
Well, yes, you can look to buy or average at current levels. The only reason why I believe that you could look to average at current levels is the huge divergence the stock is with respect to its 200 moving average. I think at current zone, the 200 DMA is at 120. Today, the stock is up some 8.5%. But then technically, it's still down some 35, 40 rupees from its 200 DMA for itself. So that's a divergence of 30 to 40%. That itself could be a point where you may look to have some mean reversion for the stock price. So statistically, I think it's a good zone where you can look to buy. Possibly 85, 82 could be a better rate to try and average it out further.
Okay, we've got a question coming in from Mohammed, and he's asking about Aarti Drugs. He's been holding for some time, he says, and he intends to hold for the next couple of years. Vikas, what's the view on this counter? Would you suggest that this is the best prospect, or would you suggest shifting to something else?
No, certainly not. This would not be the best pick from the pharma space. I think he could certainly move to some other good quality stock. I think Granules India at the current levels looks good. The company has announced a board meeting for buyback on the 9th, and I think this stock would do well. Looking at the way Laurus has declared its results for this quarter, I'm expecting pretty good set of numbers from Granules. The stock has also beaten down and is trading at reasonable valuations. So I think it would be a prudent strategy to switch from an Aarti Drugs to a Granules India.
All right, this one is from KR Balan, and KR Balan is saying that he wants to buy BSE and Zomato shares for the short to medium term, and this he wants to do by selling 200 Mahindra shares that he has, where he's already making 20 plus profit. What's your take on this one, Kunal? Do you think this strategy makes sense to book profits from Mahindra, rather exit Mahindra and look to buy BSE and Zomato instead?
Well, I would suggest not to do that change. I believe Mahindra and most of these other auto stocks, they have a substantial upside from current levels. And buying into a volatile stock like Zomato and BSE, I think could be a bit of a concern. So yes, the chart patterns for these stocks are attractive, but then trying to sell gold for maybe a silver or so may not actually turn out to be a better strategy. Price-wise, you may get a better appreciation over there, but then the risk also matters quite a lot. So, the market keeps on evolving. There are so many dynamic factors which keep on happening to the markets. So, in case if there is any further correction in the indices, say in the next 3 to 6 months, there could be possibility that stocks like Zomato and BSE, they can correct more sharper as compared to a stock like M&M. And, in the business models, etc., are very solid in that case as well. So, I would suggest not a switch from M&M. Maybe if you can switch some other high beta stock from your portfolio towards these stocks, that could be a much better bet.
That analogy of gold and silver is actually very apt. I'm very, I like this, and I'm definitely going to use it. Thank you, Kunal, for that. Possibly, yeah, I think that makes sense, right? If you talk about the importance, you might get more appreciation, but at the cost of increased volatility. So while you have the potential for gain, you also have the potential for more loss. Exactly. That is a concept, I think, that is very important to understand. All right, we've got a question coming from Ravi, and he's asking about Bharti Airtel. He's asking if this is a good time to buy, Kunal. He's already holding at levels of 690, but he's only looking to hold this for the short term.
Well, may not be a better, a good zone to buy Bharti Airtel because the stock is still consolidating. And I think in the last, 2 weeks as well, the stock has done very precious little for itself in terms of the rally from 640 levels. It's just jumped up to maybe 690, 695. That was the high the stock had made, I think, 2 days back. So I don't sense a major breakout coming out for Bharti Airtel over the very near term. I would suggest that you can probably look out for some other names. Those could be more stronger potential momentum bets rather than Bharti Airtel at current levels of 690.
Okay, the next one is for you, Vikas. This one is coming from Ronnie. He's writing to us from Kerala, and he would like to know your opinion on GMM Pfaudler and whether it's a good time to make a fresh entry in this counter for the longer term. What's your take on this one, GMM Pfaudler?
Now, again, a very good company with solid fundamentals. The stock has performed also. In a weak market also, the stock has been doing well. I think if one would have already invested into it, one need not worry and should continue to hold on to the stock. But for buying at the current levels, I think one could look for opportunities to buy into the stock. So on a weekday or when the market's correct and the stock also comes down, I think it would be a good time to buy into the stock from a long-term point of view.
Okay, fair enough. We've got Vivek who's asking this next question, an interesting one again. Vikas, this one's for you. He's asking for 2 to 3 hidden gems where consolidation makes it evident that these can be great investments for the next 1 to 2 years.
To come out with names offhand is a bit difficult, but some of the counters or some of the stocks which come to my mind, which can be bought at the current levels from 2 to 3 years perspective and would generate substantial returns from here. One among them would be Borosil Renewables, which I like. Current levels are around 620 odd. I think it's a fabulous company. It's a monopoly kind of business. It's into solar glasses, and they've recently done an acquisition in Europe, in Germany, and the company they've acquired is the largest solar glass manufacturer in Europe, and with the kind of problems which Europe is facing, I think that will also do well. So I'm bullish on Borosil Renewables at the current levels. The other stock which I'd like to recommend would be an Indian hotels at the current levels. I think Indian hotels would do well. Most of the hotel stocks have done well. We've seen results from East India Hotels. They were excellent. Even ITC, during their commentary, they said that ITC Hotels has done exceedingly well. So Indian Hotels being the largest hotel company and with the kind of aggressive expansion which they've undertaken, and with the kind of occupancy levels and occupancy rates which we are witnessing, I think at the current levels of 270 odd, Indian hotels makes a very good buy. So that could be another stock which could be looked at. Then I think one could even look at a textile company by the name of Aditya Birla Fashion Retail, which I like. It's currently trading at close to around 280 odd levels. I think it's a great company with pretty solid brands like Van Heusen, Louis Philippe, Peter England. There are some international brands also which this company owns, like I think Forever 21 is also with them. And they've recently acquired some designer brands for ethnic wear. And that segment is also doing well. We know India wedding season is very strong. So I'm bullish on this, and it's a Birla Group company, trades at reasonable valuations. So it's a perfect retail story to play on India's growth. So I think Aditya Birla Fashion Retail is also one of the stocks which one could look at.
All right, so those are the jewels, the gems, and all those stocks that you can look to invest over the longer term. Indian Hotels, ABFRL, are some of the names that Vikas spoke about. But let's move on, and this one is coming from Rajesh, and he wants to know, is my trip, Kunal, if it can be bought at current market price for a 20% return over the next 3 months?
So I think 20%, which means you are expecting the stock to come back towards 470 levels, 470, 475. Looking at the current price for the stock, I think it's at 385 approximately for Ease My Trip. But I think a better price to try and buy the stock would be closer to 350 levels. From there, the potential upside and the risk reward would be far more favorable for the stock price. So what's happening is the range is shifting on the lower side for Ease My Trip, where earlier the resistance was, I think, around 475. Then the recent resistance is around 460. So even if you factor in, say, possibly potentially another drop of 15 rupees from the top side, you could be looking at 440 as a potential, upper end of the target for the stock price. So to have a 20% return, it makes a lot of sense to buy the stock maybe another 20, 25 points cheaper from current levels rather than buying at current zone. Okay.
We've got a question coming in from Kavi, okay, I'm not able to get this name. Balamuragan, okay, Balamuragan is asking about a question on Tidewater Oil India. This one's on the fundamentals. So Vikas, this one's for you. Would you suggest a fresh entry based on fundamentals?
Clearly, I do not track this stock very closely, but it's supposed to be a good quality company, and I think if one has invested, then he can continue to hold on. But for levels to buy into, I think if you could check with Kunal, he would be in a better position to tell you.
Water Oil India, which is currently trading at 1,195.65. Because I'll take your suggestion and I will try to go to Kunal. Kunal, any view on the charts?
Well, I think you should avoid the stock, frankly, because I remember I think the stock had a fantastic uptrend in 2015-16, where it shot up on a multi-month basis. In 2020 as well, the stock has done exceptionally from 1,000 to 3,000 levels. But the only biggest concern is the fragile nature of the stock price, because if your stock moves up 2x, 3x, and if it's able to give up all of its gains in a phase of correction, which means you should not be looking to be staying invested into the stock from a long-term play, because those are very high volatile bets for the stocks, and assuming if you happen to buy the stock at the wrong end of the curve, you may potentially lose maybe 30, 40, 50% of your capital as well. So I would suggest to stay away.
Okay, this one is from Sukanya, Nippon India. She has 100 shares purchased at 390 rupees per share. She wants to know what she should do for medium to long term, wholesale, average. What's your take on this one? Vikas, do you track Nippon India?
Yeah, it's again a good quality company, although the stock has corrected and the investor is sitting on huge losses. But I think at the current levels, one should hold on to the stock. I think we could see substantial upside in the coming say year or so. I have a target of 350 rupees on the stock in the next 9 to 12 months.
Okay, all right. Gentlemen, it's time to hit the rapid fire segment, and you both know what this is about. So I'm going to launch straight into it. We've got Satish, who's asking about GSFC, and he's asking whether fresh entry makes sense at this point. Vikas, what's the view?
No, fundamentally, a great. Some stocks are really doing well. I think one could get buying of.
Okay, Shobna wants to know about Oracle Financial Services. Kunal, is it a good buy at this price?
Well, I would suggest a buy at current terms of 3,300 for a potential target of 3,500 plus.
Vikas, IDFC First Bank, is it a buy according to you? Satya wants to know for the long term. Would you suggest a fresh entry?
It's gone up recently after the numbers which the company produced over the last couple of days back. I think we should look at some declines in the stock.
Okay, Kunal, this one is coming in from Varun. Lupin, he's holding since the level of 1,500 rupees per share. He wants to know whether he should hold, add or exit. He can continue to hold on for the next 3 to 5 years.
Well, I don't see any major reasons to hold on to the stock price. It's been an underperformer. Unless the stock breaks past about 750, you should try and avoid the stock.
Kunal, how would you play BHEL September futures? This is a question coming in from Jagdish.
Well, I would be a bit skeptical and negative into the stock price. It's failed to break out multiple times historically as well, so I would suggest an avoid.
Okay, so Darshan wants a view on Wipro. He's saying he sold 500 call options. What should he do, Kunal?
Well, then I think you should probably have a trailing stop loss. Maybe at the stock crosses that 450 mark is where I believe should be your stop loss point for your selling of call options.
Kunal, would you sell Escorts and buy Raymond at this point for the next 6 months?
Well, not individual, I mean not as a trade, pair trade, but I think both these stocks are attractive. So I would probably keep Escorts and look to buy Raymonds as well.
Okay, Jaya Krishnan wants to know that she wants to re-enter Maruti. At what levels can one enter for the medium term, Vikas?
I think Maruti would continue to do well. So I think closer to around 8,200 to 8,400 would be a pretty good level to buy into the stock.
All right, gentlemen, thank you so much for taking the time, Vikas as well as Kunal. Always a pleasure speaking with you. And viewers, do stay tuned. We've got more on the other side. So we'll be back after this very quick break. Everyone knows is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikund, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible.